Did you see this coming? India may have quietly pulled out a staggering $50 billion from US Treasuries, and most people didn't even notice. The world didn't scream. There were no headlines shouting massive sell. But if this is true, it could be one of the most significant financial moves of the last decade. Today, on Dollarscope, we're going to unpack every detail of this quiet exit, why it matters to the US and global markets, and what it might mean for your money. But before we dive in, make sure you hit that like button, subscribe to Dollarscope, and turn on notifications. That way, you won't miss any updates on big financial moves like this. Trust me, you'll want to stay ahead of the curve. Let's set the stage. India, one of the world's fastest growing economies, has been quietly accumulating US Treasuries for years. These are considered one of the safest investments globally, a way for nations to park their foreign reserves with minimal risk. But in the past few months, there's a shift happening. Reports suggest that India has been reducing its exposure to US debt, selling billions quietly, without triggering panic in the markets. $50 billion is not small change. It's huge. Now, why would India do this? There are several reasons. One is diversification. Holding too much US debt exposes a country to fluctuations in the dollar and US interest rates. By scaling down, India can redistribute its reserves into other currencies, commodities, or even gold, reducing risk in case the US dollar faces downward pressure. Another reason could be domestic priorities. India is investing heavily in infrastructure, defense, and technology. That kind of spending requires liquidity, so liquidating US Treasuries is a smart move to free up cash. Let's also consider the timing. The US economy is currently showing signs of slowing down. Interest rates are high, inflation is fluctuating, and debt levels are rising. For a country like India, holding massive US debt in such conditions could be risky. By selling quietly, they avoid a sharp drop in bond prices, a tactic experts call a quiet exit. It's subtle, it's smart, and it's strategic. Imagine being at a poker table. You've been holding your cards close for years. Suddenly, you see a chance to fold without tipping off the other players. That's what India might be doing with its treasury holdings. No announcements, no headlines. Just a careful, strategic move behind the scenes. And here's where it gets interesting. If India's move inspires other countries to follow suit, it could signal a slow but steady shift away from US debt dominance and global reserves. And here's the part that makes every investor sit up. While $50 billion is huge, it's only a piece of the puzzle. Global investors are watching closely. China, Japan, and other big holders of US debt have been adjusting their strategies as well. Could we be seeing the beginning of a trend where US Treasury dominance slowly weakens? If that happens, it could impact everything from interest rates to the dollar's strength. And yes, even the stock market. But don't panic just yet. The US still has a massive domestic demand for treasuries, and foreign holdings are just one part of the picture. That said, movements like India's quiet exit serve as a warning. Global confidence in US debt is not infinite. Markets are like oceans, tiny. Ripples can become waves over time. If several large economies decide to reduce exposure quietly, those waves could grow faster than anyone expects. Let's break down the implications further. For US investors, a quiet exit of $50 billion might mean slightly higher interest rates as the US government competes to sell its debt. For global investors, it might mean rethinking allocations, maybe shifting into gold, commodities, or emerging markets like India itself. And for everyday viewers watching Dollarscope, it's a reminder that behind the calm of daily market reports, there are major moves happening that could affect your portfolio without you even realizing it. You might be wondering, is India alone in this? Not really. The trend is subtle but visible. Other countries are also quietly diversifying their reserves, preparing for a future where the US dollar might not be the ultimate safe haven. This isn't a crash or panic. It's strategy. It is the kind of move that makes analysts scramble for explanations and financial pundits write endless reports. But in reality, it's just smart money moving where it sees stability and opportunity. If you're finding this insight valuable, take a second right now to comment below what you think this move means for the US stock market. And don't forget to share this video with friends or colleagues who care about global finance. because knowledge like this is too important to keep to yourself. Now let's think long term. What does a quiet exit like India's teach us? It's about preparation, diversification, and awareness. The world's largest economies are constantly adjusting their strategies. Being aware of these moves can help you make smarter decisions, from where to hold cash, which assets to buy, and how to hedge against risk. Watching trends like this on DollarScope isn't just fascinating, it's essential for anyone serious about preserving wealth. And the subtlety of the move matters. If India had sold $50 billion openly, it could have spooked markets, caused unnecessary panic, and hurt the very value they were trying to protect. By doing it quietly, they achieved their objective without disruption. That's a lesson not just in finance, but in strategy. Sometimes the biggest moves are the ones you don't announce. To wrap this up, the takeaway is simple. Keep an eye on global holders of US debt. Understand the implications of large-scale quiet moves. And always think strategically about your investments. The story isn't just about India or the US. It's about how money flows globally, and how small, quiet shifts can eventually create waves that touch every investor. So, here's your action step. Stay informed, stay diversified, and comment below your thoughts on India's $50 billion exit. Will other countries follow? What does this mean for the dollar? Let's get a conversation going. And of course, share this video with anyone serious about money and markets, because these insights are the kind you won't find on mainstream news. Thanks for watching DollarScope, where we break down the big moves in global finance and make sense of them for you. Remember, the quietest exits sometimes make the loudest impact. Keep learning, stay curious, and I'll see you in the next video.